Hello, ladies and gentlemen. Welcome back to another episode. This is your host, David Kim. Hola, bienvenido.
Muchas gracias. Thank you very much for the invitation, David. It's a pleasure being here.
Thank you so much. And let's get it started by introducing yourself, your background, your journey founding the Fairplay.
Oh, perfect. Well, I'm Manolo Atala. I'm co-founder and CEO at Fairplay. Fairplay, it's a revenue-based financing platform that supports entrepreneur growth with a flexible financing product. We launched back in 2019. This kind of product. It's new in the region in Latin America. We are the first company, the first revenue-based financing platform in Spanish-speaking countries in Latin America, and we are thrilled to help entrepreneurs in the region to grow as fast as they can. I've been intrapreneur and entrepreneur for the last 12 years. I had the opportunity to launch big companies like Groupon in the region, then Corner Shop, the biggest grocery delivery application in America, and now as an entrepreneur with Fairplay. So I'm thrilled to be here.
Got you. Yeah. So hearing from you sounds like Fairplay providing kind of AR financing. Is it correct to understand that?
Yes, we provide financing, flexible and fair financing for entrepreneurs in the e-commerce ecosystem
I
throughout the
see.
region.
Okay. Then
Exactly.
can you explain what problem are you solving now?
It's a big problem. There's a really scary metric, which is from the 100% companies that are looking for venture capital funds, just 1 to 1.5% get access to this kind of capital. And the other 98.5% can have access to venture capital either to financial products like credit bank lines or venture debt funds. So these companies are struggling to grow because they need working capital to be faster and to buy inventory, to buy online marketing and pay their logistics costs. So we created a product that helps them to have these working capital lines of credit, and they repaid us with their own sales, with a percentage of their sales till we recover all the investment plus a fee. It's a flat fee. They're zero interest.
Got you. So I've been in the banking sector almost 3 decades in Asia, but the bank and financial institution is very self-focused. They want to provide the financing and then ask you to repay the money at the end of the day with a bullet payment, right? But the problem is
Exactly.
entrepreneur is have a cash flow and then selling under credit, selling under installment. They have a cash flow the mismatch. They want to match their cash flow shortfall, having the financing solution, right? So it sounds like you're providing solution for that, right?
Exactly, because the banks or traditional financial products, they do the underwriting and the risk modeling hasn't changed like in decades, like since the 60s or 70s.
More than decade,
So,
100, probably 100 years.
or probably 100 years. But what I mean is that these kind of new digital economy companies work totally different from a traditional company. As you said, cash flows are extremely important. You have seasonality throughout the year. So you have peaks and valleys throughout the year. So you have a better position to pay, let's say, in a season peak. But if you are in a valley, you are not able to pay for your credit line. So like we are just going with your seasonality. So you pay a percentage of your sales throughout the year. So it's really flexible, really fair. We can make an offer in 48 hours. So it's fast as well. So we create this to help a lot of entrepreneurs struggling with financing in the region.
Got you. So sounds like you are not really positioning yourself as a financial lender, but as a solution provider, and the helping your client, corporate client, right?
Exactly. Apart from the financial product, what we do is we have a technology platform with insights. So let's say that you are in e-commerce and you plug into our platform. So you connect your Google Analytics, Facebook, Shopify, the IRS API. So what we do is we mix every other data point in one platform, in our platform, and we give you insights for you to make better decisions to your business.
I got you.
So we are a tech company with a financial product.
So on high level, it is in terms of nature of your service model is more like a AR, account receivable financing, right? But in terms of a structure, is it platform or software I mean solution SaaS business model? I don't. Can you explain a little bit about the detail about the structure of a business model?
Sure thing. Well, first of all, we are not a SaaS company because we are not charging for our data intelligence platform. It's for free.
Okay.
It's a premium platform. Every other e-commerce company can plug into our platform for free. If you want financing, we can offer financing for your working capital. So we offer from $5,000 to $1 million plus dollars to your company. And it's really flexible because you can use that line throughout probably 3 or 4 months. You can keep using it during those months, and you will start repaying after 30 days, but in tiny fractions every day. So you pay daily payments till we recover everything, probably throughout 8, 9, 10 months in the future. So once you finish that line, we can open another one. So you can still use it. It's not a revolving product, but it's kind of a revolving product because you can have continuous access to capital throughout years. So
Yes.
that's how our business model is
I mean, you
structured.
did. You said that it is not a revolving credit, but in terms of nature and then relationship with the client, based on the sales and revenue, you continue to provide your services. So basically, it sounds like a revolving credit, right? Based on relationship.
Sounds like revolving credit.
Okay.
Yeah, the difference between revolving credit and our financial product is that with a revolving credit, you get a line, let's say $1 million, and you keep using that amount of money and you repay. Every time you repay, it gets into the line again. These are
Yes.
finite like
That's a revolving credit.
lines.
Revolving credit facility. Yes.
Exactly. So that's how Fairplay works.
Can you tell us a little bit about the target
Yes.
client transaction structure you are supporting? So, I mean, in terms of ticket size, I mean, the ticket size of financing, and then size of company you're supporting, and nature of the business of your client, etc.
Sure. Well, I'm going first with the basics. The basic client should provide at least 12 months of sales or data. They should sell at least $5,000 a month continuously or consistently. And that's the minimum we ask. They need either they can be incorporated company or they can be an individual with a IRS structure that they can sell their products on their name as well. So that's the basics. We have a really high spectrum of clients regarding size and kind, because we have clients from, well, we're focusing e-commerce companies. They need to be selling online either products or services. And the size of the companies varies a lot, because we have companies that are selling probably $7,000 a month, and we have companies that are selling 2-3 million a month USD. So the range it's really big. In terms of kind, we have fashion companies, we have electronics companies, we have pet food and accessories companies. We have every other kind of company in the e-commerce ecosystem. So that varies a lot. And the kind of intelligence that we give them, it's because we have a broader kind of range in kinds of companies. We give them really good insights and comparisons, whether they are doing good in certain KPI or not. We are really careful with the data. We never share data from any specific client. We share data of an industry, of a complete industry and e-commerce as a total. So this way we can help them. We know what their pain points are first, and then we give them data to fix those pain points with capital and with data, with smart data. So so yeah, that's how that
Uh,
works.
do you have a competitor? Then, if so, how do you differentiate yourselves against others in the market?
Great question. Actually, we have competitors, not in our region. In our region, in Spanish-speaking countries, we don't have any competitors yet. Uh, there are one in Brazil that has the same business model
They
than
speak
us. A couple
Portuguese,
of
right?
them.
They speak Portuguese.
Exactly, exactly. They speak Portuguese. And we have competitors in the UK. We have
Mm-hmm.
several because there is Uncapped in the UK. There is Wayflyer. There are new incoming competitors in the region in Europe. And then we have one in Singapore, which is the name is Gemfi. They're really, really cool entrepreneurs as well. And we have the biggest competitor, I think, it's Clearbank in the US. They were the first revenue-based financing platform for e-commerce companies in the world. They launched or they pivoted that model back in 2016 or 17, or probably 15. I don't remember. And those are for e-commerce companies. And then you have the SaaS revenue-based financing platforms, which is, for example, CapChase in New York. There's Pipe. Pipe is a little different because they are a marketplace and they are investors in one side and they are the companies and they are in the middle. They are the pipe between investors and the companies. So it's a different model. So yes, we have several competitors around the world.
In the
We
world,
are
not in your market.
not in our market yet. I think we're gonna see competitors popping up in the next years. But right now we are the main and the biggest one in Spanish-speaking countries. And what differentiates us from the competition, I think it's our technology product.
I see.
We have a really good intelligence platform. We have been building that since the last 2 years. And what we do is to understand our clients, to try to understand their pains, try to understand how they manage their businesses. So this way we can give them metrics and KPIs and analytics that helps them run their business more efficiently. We have a lot of APIs plugged into our platform. So this way they can, if they have whatever platform they can plug in, either they have Shopify, WooCommerce, PrestaShop, Magento,
Yes,
whatever
yes,
platform
yes.
they can plug in.
Differentiation, if you
So
can provide a solution more focused more on the service and solution rather than financing, then you can differentiate
ex-
yourself others because
exactly. I
mm,
think that helping entrepreneurs managing their business as a whole, like giving them metrics regarding their marketing performance marketing, giving them insights regarding their inventories, which products are selling more, are selling best,
yes,
their
yes,
margins, everything, and even their cash flow management.
sure,
So
sure,
it's a really good product. It's a really good
yes.
product.
So helping with their pain point, right?
Exactly.
And
We help them.
for entrepreneur who run the startup is the biggest challenge. A couple of the biggest challenges is number one is fundraising. Second is finding a right people to work with you. So how do you find the smart people? I mean, who can work with you, help to grow the business together?
Well, let me just split the question in two. First
Okay.
of all, let me say that a CEO job,
Mm-hmm.
it's basically two main things:
Mm-hmm.
fundraising, as you mentioned, and hiring the best people.
Yes.
And putting the vision in front
Mm.
of everybody and work with the vision with the team. So regarding the second one, the hiring part, it's really tough to hire the best talent available because really talented and skilled people are in really cool companies, and you need to be able to be, first of all, an amazing salesman, a
Mm-hmm.
really good leader, and you need to have a specific kind of culture that could attract this kind of talent. So you need to do a lot of things at the same time. I think that in a recruitment process, you need to be not as a company trying to measure the skills that somebody has. So you need to be selling the company, you need to be selling the culture, and you need to be selling the vision. So you are in a selling process with a candidate.
That's
they're
interesting.
they're nothing
Interesting.
just. Yeah, because everybody thinks that the interviewer, it's kind of okay, please sell you need to sell yourself to me because I'm interviewing, and I'm the one who's going to pay. And that's the wrong approach. I think both parties need to be selling what they are going to add to the company, what kind of value they're going to add, and what kind of value the company will add to them, professionally and personally wise, because it's a marriage. You when you
Yes,
when you get
that's
into the
what I thought.
company, and you or exactly, and you hire a person, you're going to see that person often, more often than your wife or your husband, more probably sometimes more than your kids. So the thing is that you in an interview, you both need to be selling the value added you're going to bring in to the deal. So I think that approach helps a lot in the recruitment process. And the second one, regarding culture, if you build a really smart culture and kind culture since the very beginning of your company, it's way much easier because you express that in every other way. You express that when you are selling your product to a customer. You express that when you're selling the company to a fund, to a venture capital fund, or a venture debt fund. You are expressing that when you're hiring and when you're firing as well. You need to be
Hmm.
kind when you are
Hmm.
firing as well. You can be a jerk, firing someone. So if you have a really good culture, for example, in Fairplay, we have 6 virtues, right? We have a really deep kind of virtues throughout the company. Uh, I'm gonna mention them. It's curiosity, first of all. It's bravery, so everybody can express themselves accordingly to every other context. We have rationality, so we are data-driven company. We have humility, so there is no one better than anybody else. So they all add different kinds of value in the company. We have respect. We never proactively intend to harm any other stakeholder, either is if it's an investor or a colleague or a customer. And we have duty. We have a sense of duty that we need to take care of our resources, the resources that investors gave to us, and we need to take care of the performance of the company. So if you have this set of virtues throughout your culture, it's way much easier for everybody to work in a framework, right? So it's easier that way to hire really talented people and to try to be a magnet of of talented people.
Yeah, I could not agree with you more. In fact, yeah, because everybody looking for I mean, a very beautiful wife, and then smarter, and then with a better family background. But at the end of the day, we should make sure that we can sustain that partnership.
Totally agree with you.
I agree. I
You
agree.
made an example, a really interesting example. It's like hiring just because you saw an amazing profile on LinkedIn. It's like marrying the most beautiful girl and that's it, or the most handsome man and that's it. You need to create a relationship long term. You need to be in constant improvement of both parties. You need to know which kind of battles you're gonna fight and which battles you're gonna pass out. So it's a relationship basically,
Yes,
as
I
you
totally agree.
mentioned.
Actually, because of my background in the past, I helped to set up so many international joint venture, and then I was asked to give a lecture about the topic joint venture or alliance a couple of times. The people ask what is the best way to set up the joint venture or to pick up the joint venture partner. I always told the people, I mean, most of large international company trying to find the biggest company, the better one in the local market. But I told them that may be a very wrong choice. I mean, if you pick up the Miss Mexico and then the highly educated, the smartest one in the Mexico, then you may think about it. Can you sustain their relationship? Are you sure that she respect you instead of looking down on you, right? If you're not sure, so, I mean, you totally wasting of your time signing the joint venture agreement, put a lot of money in the joint venture, but she looking down on you, then waste of time, right? But it happened a lot actually in reality. It happened a lot in reality.
Totally, David. You have a lot of experience in the financing sector throughout the last 3 decades, and you have seen probably really good deals and joint ventures that works perfectly, and you have seen for sure deals that go sideways because of respect, because of culture, because the teams don't want to work with each other. I don't know. You have probably seen a lot of really good
Yes.
examples, and for me, it's the same when you are hiring and when you
Yes.
are putting more people and more people in the company.
I agree. I agree. I mean, at the end of the day, everything is a human being, about the human being,
Exactly.
not the box
Every
ticking,
time I
not a box ticking process.
exactly every time I tell my salespeople, most of the salespeople, I told them there is no such a thing like companies doing business with other companies. It's people doing business with other people inside companies, but it's people at the end of the day, and you need to understand people.
I agree. Agree. So, what do you have on top of your mind for next step and your vision with Fairplay?
Great question. Actually, let me just separate this in two as well.
Mm-hmm.
Um, the next steps for us it's to raise funds, bigger amount of funds, because we are our main product. It's money, so we need to continuously be fundraising debt in order for us to provide these credit lines to our
Okay, then
customers.
let me ask you a question then. How do you
Yes.
finance your operation then?
Well, we have a really simple structure. We have equity in one side, and we work with that equity throughout time. But we at the same time we raise debt as
Mhm.
well with venture debt funds with bigger banks. Hopefully, cheaper and cheaper every time, cheaper and cheaper capital. So the thing is that we structure everything with a piece of leverage equity with debt on the top. So that's the way we are structured. Um, and regarding fundraising, we are always and continuously fundraising debt every time, refinancing the past lines of credit with cheaper capital and better capital with less covenants and warrants, as you probably know.
Mhm.
Um, and we are focusing as well on raise equity because we have a really aggressive expansion plan throughout the region, and we need to build the best technology product, and that's why you need equity for that. You can use that to build a huge technology product. So that's regarding the next milestones at fundraising. The vision, it's really aggressive in the good way. um, what we are aiming to do in the region is to invest at the same pace of venture capital in the other 98.5% of the companies that they are not in their thesis, in their investment thesis. So we want to support thousands of entrepreneurs throughout Latin America to grow faster and better and smarter, with billions of company to support them. So that's an aggressive statement and an aggressive vision for Fairplay, but I think it's doable and it's a fair thing to do in a region that is growing. The fastest growing region in e-commerce in the world is Latin America right now, and they don't have a support, a financial and analytical support, and that's what we want to bring them to thousands of entrepreneurs and SMEs.
Got you. Got you. My last question is also my favorite question. Who is the nicest person you have ever met in your life, and then why?
The nicest.
Yeah, nicest person.
Wow, that's the first time somebody asked me that. Everybody asks like, "Who's the your favorite entrepreneur? Who's the favorite?" But the
Yeah.
nicest person can be family or not, non-family.
Except for your family member.
Okay, well, except for family members, I'd say there's a partner of mine, but you specifically asked for nicest, and he's the
Nicest means
nicest
in
person.
that somebody who gave you the unexpected help at the most difficult time.
Oh, that's kind of different because I have a partner that is the nicest person with everybody,
Mm,
But
mm.
I think I have two people in mind that are the nicest that help me when I really extremely need it. and there are two. One of them, it's a really good friend of mine. She's Fernanda,
Mm-hmm.
and she helped me when I was struggling, like 15 or 16 years ago. I was like professionally lost, and I was like thinking, and I was really wanting to get into a company, to work for a company, and she helped me to introduce me the HR team, and she pushed the HR team for me to hire me, and I'll never forget that. I was really, lost and desperate, and she helped me a lot. And the second one, it's one of the well, for me, the best venture capital firm in Mexico, which is Mountain Nazca. One of the managing partners, Hector Sepulveda, helped me in a really tough time 3 years ago. Um, so I'll never forget his help, and he bring me into his wing, and that's why I knew venture capital into the core. So I think those two people helped me. There are a lot of people that helped me throughout
Yes.
my life, but I always remember those two in really tough times.
Got you. Got you. Thank you so much. Thank you so much for taking time introducing your interesting, ambitious entrepreneur journey, sharing your story.
No, thank you very much, David, for inviting me. It's really interesting what you're doing in Asia and in all these emerging markets. I think it's really helpful that you're joining, you're matching a lot of emerging markets, different kind of businesses, and it's really worth it for a lot of entrepreneurs here in us right now, and so as the financial executives as well.
Yeah. Thank you so much for nice words.
Thank you for making this happen, David.
Thank you very much for listening to this episode. Don't forget to subscribe to the podcast, share with a friend, and drop me a review. Goodbye.